Good morning. What's up, guys? How we doing? Hope you're all doing well here so far this morning. Market is open. Institutional orders should be clearing out here within about the minute, and we can get to work. All right, now, looking at the daily chart, take a look up top with me here. Well, actually, first off, let's take a look. I'm going to be trading off a 5-minute chart here today. This is MNQ. I'm not against transitioning, again, to ES if MNQ is not quite as smooth as ES, though typically MNQ is going to be a little bit smoother, at least in my experience. So we'll take a look at the inertia here in a second. First off, how we doing? Steven, good morning. Tromisha, good to see you. Prince, Faba. Christian, Trading Chris, what's up, guys? Good to see you all. Okay. Now, market inertia-wise, we were dealing with that little flat top that kept creeping a little bit higher, right? As time went on, we were dealing with that for weeks, almost 2 months, six to 8 weeks. And we've now finally attempted a breakout. Now, the last couple of days, I suppose if we're including today's daily bar here, there's a daily chart. We're looking at the bottom of this screen, okay? It's slowed. I'm very curious to see, in hindsight, at the end of today, how today's daily bar ends up closing. If it ends up essentially a doji, that's fine. My plan here today, head down, scalp hard. But if it ends up a big bull bar, then all of a sudden we got to start thinking, hey, are we entering a trend market? And then the scalps turn into slightly longer average trade durations and probably bigger average winners. Okay. So, but for now, there's really nothing here yet to convince me that, hey, we're breaking out of what has been a range for 6 to 7 weeks. But it's in the back of my head now more than ever in the last 2 months that we may be seeing a breakout. But you have to understand, I mean, realistically, whoa, big volatility there. Realistically, we kind of saw a similar thing here that just turned into a range for 6 weeks. So we'll keep an eye on that here. And, again, I'm watching. I'm going to start on the 5-minute here today. 5-minute top left of your screen, 2-minute top right of your screen, daily on the bottom. This here is a 5-minute, and we'll keep an eye on it. And if we have to transition to the 2, because the 2 is giving us better setups, we will. But for now, I'm going to stick with the 5. Tromisha, got a question? I use MACD to determine bullish or bearish divergence in a stock. What's your experience with that? Good or bad practice? Also, I've been noticing, and I've also been noticing trend moves in my plays. I took MACD and RSI off my charts years ago. I finally gave up on them probably at least 4 years ago. It's been a little while. To me, they're a distraction. I never got any kind of value out of it. Arguably, the MACD could be more helpful trading intraday than the RSI, because the RSI, there's so much room for error. There could be 45 days of error. It isn't helpful. But the MACD, I've seen some people use it intraday to turn them off to a stock if they're trading it. For me, price action is king. And looking at the MACD is a substitute for not just reading the price action in my head. So I'd rather just keep it clean, watch price. All right, Bear's trying to push this here today off the open. Now, market's been open for 18 minutes. Total range here so far on the day, we're looking at about 80 points. Okay, this is pretty typical. This is what we've seen as of late. We saw 70 on, I think, Tuesday. 85 was the entire day's range yesterday by like 9:30 Central. So this isn't bad. This isn't bad. Volatility has really been the number one concern as of late, but we've been able to put some things together here. So again, head down, scalp here, and see what we can do. James, doing well here. Yeah, you know, Tramisha, what I would tell you to do, for example, if you were one of my one-on-one people and I had skin in the game, what I would tell you to do is pull it all off your chart and just watch price. Everyone's trying to look for like a shortcut to what the reality is, what really matters, which is price. And then when it comes to price, people start saying, well, you know, do I use a 5-minute? Do I use a 2-minute? Do I use a 1,000 tick chart? Do I use a range chart? I really don't think it matters. I don't think anyone is better than the other. It's only a spectrum of quantity of your setups versus quality of your setups. The higher you go in the, I guess, quantity of whatever it is we're talking about with the chart, whether it's range, ticks, time, the less setups you're going to get, but the higher the quality on average each setup's going to be. The lower the time frame, the more stressful it is to trade it. The on average, slightly lower quality each individual trade is going to be, but you're going to get a lot more of them. Okay, so I don't think people realize this. If you can trade a 15-second chart incredibly well and make almost no errors, you're going to make more money than if you're trading a 15-minute chart, right? But the problem is that's so fast. I tend to think of myself as a relatively quick thinker when it comes to charts. And a 15-second chart, I'll just be making mistakes all day. All day. A 60-second chart, there's a lot to think about here. You have to look at the bear case, you have to look at the bull case, you have to look at all 3 bear cases, all 4 bull cases. You have to think, okay, wait, is it a range day? What is the range lately in the market? All these things come into play, and you know, can you really make that decision in 10 seconds trading a 15-second chart? Because you got to be ready for the rollover when it comes. Probably not. So, you know, two minute is good. You can trade the 2-minute, I'd say, all day, though it is a little bit fast to trade for 6 hours. The 5-minute is fantastic choice. The 15-minute's great. If you want to trade a tick chart, so be it. There's no right or wrong answer. It's all just the same data displayed a little differently. The only thing that changes here in my head is, hey, you know, the 5-minute has more eyeballs, so maybe we get a little bit more self-fulfilling prophecy effect there compared to like the 2-minute, or some, you know, weird tick chart that's not really a round number. So getting a push here, that range is starting to expand, getting closer and closer to a 100-point range here off the open, which is good to see. Okay. So the range of these bars is, you know, 36 to 50 points, which is good. We're getting quite a few wicks. I mean, same story here, really. On the 2-minute, top right of your screen. Bit of wicks. A lot of inside movement, meaning inside of the previous bar, which is tough to trade, at least tough to scalp, the way that I'm looking to. But we're going to hit quick hitters here today. Nico, passed my first ever eval yesterday with Apex, wondering if you have any advice on sizing and when to take the first payout. Man, take the first, this is my opinion. A lot of people, you have to understand, like, if you're online, depending what your business model might be, you might have reason to try to break, like, the payout record. But at the same time, it's like, who gives a shit? Are you, like, if you have $1 million sitting in Apex, that's your money. That not only A, are you leaving to potential loss, which is similar to a personal account fine, but in my head, it's like, that's your money that you could request payouts on right now, and you're leaving it in the hands of a company that you don't run, own, have any information on, really. You're just a customer of theirs. They're not a bank. You know, for me, it's like when the money's there, if you want to go, you know, it's like, okay, well, I no longer have payout limits because I've taken the minimum amount of payouts and I want to take a $10,000 payout from one account. It's like, fine. But like, in my head, don't shoot for 400,000 an account. I've seen this before. I've seen people be $30,000 in the money that they could take on payouts on funded accounts across 20 accounts and blow it and lose it all in one day because they go on tilt. Just take the money. All right, so I'm looking at this thinking, hey, you know, what are the bears seeing? Descending range. What are the bulls seeing? Well, we might put in our second 5-minute chart, by the way, top left. Here, 5-minute chart. We might be seeing a bit of a reversal attempt here out of the bulls if they can hold on to a second bull bar in a row and ideally close above this wick here. That'd be the first of the day as far as consecutive bull bars. Then we got to think, okay, you know, the bears are looking at this as a descending channel. We have the 5-minute 20 up here, 15 points away from where we currently are. But we're holding on to this pretty damn well. Two-minute chart kind of looking actually interesting here. Look, 2-minute. I'm high on this wick. Back to a 5-minute here. Yeah, wicking back. Close on the 2-minute wick back a bit here. See if we can get a close above not only this wick, that's 533-ish, but also the 5-minute 20 EMA. So a close at about 540. And I'm getting long here. Dominic, do I think that high a day will hold? I don't take bets on whether or not it will test. But if we do test it, my answer to that is Almost certainly not. And I say almost certainly because we're always dealing in probabilities. But when we're dealing with something like that, a setup where, hey, if the bulls can get enough to push through it at all, then it triggers, you know, short stop losses, which are buy market orders, essentially, right? And that, you know, should be good for another 5-10 points higher. From there, you got to watch the price action. But if we test the high of day, I think we almost certainly go 5 to 10 points higher than the high of day. And I say almost certainly because double tops are always possible. But I'd be looking to take that bet. All right, 28 seconds left here on this 5-minute bar. I have a big 5-minute bar, to be honest with you, but let's take a look. See what we can do. Big pop instantly. Hang on. Give this about 15 seconds, see if we can get a pullback. Yeah, I'm not going to get an entry. That's what I was looking for right there. Happened too quick. No pullback for an entry. Well, it's good to see it worked. Immediately upon the rollover, we were already up here. If I hit a market buy, I'm getting filled up here. And all of a sudden, I'm losing 8 points on the scalp. And in a scalp, that's a big deal, so I can't smash the button in that case. All right, we're back. You see this? Someone just asked about this. We tested high a day, what'd we get? Okay, I was sorry, I was wrong. We only got about 4 points instead of 5. Stop hunting, one of the best ways to add edge to your strategy, essentially in one move. In one little change. Joe, is the 15-minute opening range more noise for you? Who cares kind of thing? No, I look at it, but in a range market, which is what, I mean, we're in until proven otherwise here. Again, we're getting, like we talked about at the beginning of the stream, we're getting into a market where we very well could see a bull breakout that turns into a short-lived trend market, but it hasn't done so yet. So the 15-minute opening range break, blindly trading it in a range market, this is what nobody seems to tell anybody, is not going to have edge. In the average market, 80% of breakout attempts are going to fail. In a range market, that number creeps even higher. So, you know, obviously fail could mean different things depending what you classify as fail, but if we kind of look at it in the fog that we're all living in as traders every day anyway, reward to risk better be damn good. And even then, I don't know. I would save it for a trend market. There's nothing wrong with the setup. It's just the context has to be right, which is the case in every setup. All right, 2-minute chart is weakening a bit. You can see shrinking bull bodies, bigger wicks up top. Let's see if that holds up. 5-minute chart, you know, big wick back, trying that high again. All right, I gotta see. Do we get a close outside of this wick here? That's what I'm watching. Nope, we don't. All right, in between, by the way, since, you know, again, I'm putting my head down and scalping today. So in between 5-minute bars, I'm watching the 2-minute. There's a pop on, obviously, both charts, but a pop on the 2-minute specifically is kind of a better look. Big pop through, instant wick back. Range market, range market, range market. But if we get a clean enough close on either the 5 or the 2, I would have to get long, but it would have to be damn clean. This close was not inside of this wick. Those, you know, you might think, well, what's the difference? Well, it shows a level of hesitation out of the bulls, right? They're like, yeah, let's not steal that base yet. You know what I mean? Like close outside of that wick. Okay, here's the test of the 5-minute 20. 50 seconds left on the 2-minute chart. Let's see if we can get a nice clean close. Ideally, I want to see beneath like 540. Here, this look will help you guys see this a little better. I'm watching the 2-minute. I'm ignoring the 20 EMA on the 2-minute. We got 27 seconds left on the 2-minute. This over here is the 5-minute. The bulls have some hope. They're going to around that 20 EMA. But I'm watching the close on this too. If we can get a close beneath 540 on the 2-minute chart. And I would get short. Yeah, I'm not thinking we're going to get it, are we? No. Not on that bar. All right, we got 30 seconds left here on this 5-minute bar. See if the market can give us an entry here. An entry for me, I think, would need to be below 540, more like 539 at a minimum. Not there. What's up, Derek? Good morning. Okay. 45 seconds, 40 seconds on the 2-minute chart, top right of your screen. I'm interested here. What was above, like 554? And we'll see if we can grab a nice little long here. Stop beneath the curl, which is also the 5-minute 20 EMA. Bulls, you're killing me, man. Every time it's important, it wicks back. See that? Can't take that. Okay, we got less than a minute on the 2-minute chart, less than 2 minutes on the 5-minute chart, watching both. Actually going to switch this to a 2. We're not looking at a 2-minute chart. Look for... Alright, take that for a little scalp, and I will risk... barely there. And let's see if we can take this out here. Or at least get close. Yeah, that'll be fine. Again, we're in a range market, so I can't ask for too much. But a small push out of here is a reasonable ask if we can get a test up top. See if the bulls can get that done for us. Okay, now based on what we're looking at, we have two scenarios right now. This is a 2-minute chart. This big range here on the day so far, we could see it end up doing this all day. And then it's a full-blown range day, which those can be brutal if you don't get it right early. But if we end up seeing... For me right now, this is kind of a bet that I think more so what we end up seeing is a bit of an ascending channel, at least for a little bit. So that's what my bet currently is on. We end up seeing a pullback here below this wick. I'll cut it because then I think we're heading into more of a range rather than the ascending channel. Well, I'm gonna move this a little higher actually. It's not necessarily my target, by the way. I just want it up there in case we get news. Yeah, I'd like to, remember yesterday's scalp to the short side it was. I kind of want to see us break the intraday high for kind of a free 3 to 5 points. Yeah, I mean, I'd be willing to take it early if it calls for it. Again, we're looking at a 2-minute chart, so everything's a little bit quicker here. Luke says I'm 600 bucks away from my first payout on Apex. Good work. I like your method of scaling horizontally. Should I take the payout? Should I take the payout and get another 50K or grow the account another 2,500 as a buffer before payout? First payout, man. Take the money as soon as you can. That's what I think. Alright, let's see if we can push through this little high here. All right, Bulls, take it through this little high and take out a stop, some stops. Give me a free 3 points of liquidity. Come on, Bulls, do it. By the way, when you're stop hunting like I am here, up top here, I know there's stops here that can push me. That adds edge to your trade if you can get a break. Free rocket fuel is how I like to think about it. However, I don't like to manage those manually if it's not a ridiculous trend market. Meaning I don't like to take profit using hotkeys on trades like this if I can help it, because a lot of times what'll happen is if we break this high, you'll get a really fast push. 4 points, 5 points, 10 points sometimes, and then an instant wick back. And a lot of times if you're doing it manually, you'll miss it. Okay, so this, had us to 575. That's not good enough for me on this trade. I need to see a break of that high for me to be cool taking it. Go Bulls, do it to him. Just gotta bust through 76.50. And I think we're just about home free if we can do that. Come on, bulls. We get a test here. You got 76.50, and I think we take out enough stops. There's not going to be a ton here, which is why I'm only asking for, 3-ish points. Oh, bulls, come on. Yeah, Dominic, a little shy here. Just got to crack that high. Without cracking that high, it's kind of a different trade. Because I need that stop hunting mentality. Again, hey, it can add a lot of edge to your trading. It's one of the easiest ways, I think, to add edge is to go into things with a stop hunting mentality. Again, obvious levels, highs and lows of day, the longer they've been there on the day after the opening bell, usually the more stops are going to be up there. And if you can break it, usually that's some free rocket fuel for an additional push in your favor. The kicker, though, is you got to break it. There we go. It's about damn time. All right, well, base hit scalp to kick off the day. Let's keep rocking and rolling. All right, so this is a 2-minute chart. I'm gonna go back and forth, I think, between the 2 and the 5. Let's hop on back to a 5-minute here and see what's going on. Yeah, I mean, you see that? You get about 5 points. If you're not stop hunting, start, I'm telling you, don't just take trades hoping that you can stop hunt things, but if you get one of your setups that you can make sense of, that makes reasonable sense for you to put on, and you're like, hey, between my entry and my profit target, look at this. Between my entry and my profit target, man, I think there's a lot of stops there. It's gonna be some free movement. Easy way to add a little bit of edge. Nice additional push here. Well, so one scalp so far here on the day. Base hit. This is where we stand so far. 1,900 bucks. Keep moving here. If you guys haven't yet, please press like on my stream. Helps out tremendously, it really does. I appreciate you doing so. John, good morning. How we doing? All right, I'm gonna be back in 2. I think it's about black coffee time. Don't go anywhere. Back in 2. All right, we are back. Again, 5-minute top left, 2-minute top right. I'm more than willing to trade off both. That first trade we took so far here today, we took off the 2-minute chart. But I'm also very interested in the 5-minute here. They both look reasonable today. 5-minute a bit wicky, but I'll take wiki over no volatility, right? All right. So, what are we seeing? And wifey's in the chat. Say what's up. What we're seeing here, what I'm looking at, we've seen this a lot lately, and I feel like I sound like a broken record, but this is just the market environment we're in. We're seeing these tight little ranges, especially on the 5-minute. I mean, the 2-minute shows it too. Look at the 2. These tight little grind higher ranges. I mean, we're seeing this like every day lately. And then what tends to happen later is we enter a trading range sideways. And then from there, it's up in the air, whether we get a second leg higher or a fade back down. But that trading range after the tight leg higher, this one's a little sloppier than normal, to be fair. But that's really important to, I think, understand, because it can stop you from taking big bets, like buying at 22,595, saying, yeah, I think we're going to 22.8. It's like, the probability says probably not. At least not today. We're not in a range. I'm sorry, we're not in a trend market, right? Hey, John, I'll drop the one-on-one application link in the chat. There you go. Okay, Bear's trying to pull it back. Now, what I tend to start thinking here is, yeah, I don't know if I'd buy it. Meaning, I don't know if I believe it, right? Because more than likely, we go sideways for a little bit in a trading range. So it's like, as much as I'd love to take a short bet, can I really do so right into the 20 EMA on the 5 that I know has a lot of eyeballs? Can I really do so knowing that we're probably going to go sideways before we go down? Now watch, we'll dump 200 points immediately. This is all a game of probably. And, you know, I think. That's what we're doing here. At the end of the day, if you can make good enough decisions around the word, hey, probably, you can make all the money you could ever need. Yes, indeed. Pat says, how does taking a payout on the 25K take profit trader work? Well, Pat, when you, if you're in a pro account, you get above the buffer, and then anything above the buffer, you can request 80% of that. So you request the full amount, and you do the 80-20 split, assuming it's like a regular pro account, and you wait, they approve it, you go back in, you press proceed, you transfer to the bank, and for me, typically, I'll exit out of my internet app, open the bank app, and it's in there before I can even open the app. It's really, really nice, Take Profit Trader. By the way, 30% off, no activation fee. Use code BIG for the best deal always at Take Profit, and Apex for that matter. But, you know, Take Profit's really nice, especially early on. If you're like, I'm trying to scale, but if I'm spending this much time on this, I need some money coming in. Daily payouts at Take Profit is very, very helpful to help you bootstrap this. Okay, so you see that we get that nice bear bar closing near the low. The 2 minutes looking more and more tempting. I gotta tell you, I want to get below that 5-minute 20 EMA though first, because right now what I'm thinking, even though we have a nice tempting bear bar closing near the low on the 5-minute chart, top left, it makes me a little nervous because I know that what we've seen a lot lately is these little tight ascending channels turn into sideways trading ranges rather than immediate reversals. More often than not, that's what we've been seeing. So I need more proof here that the bears are actually going to win this argument before I would get short, at least immediately. All right, Jackson, we'll talk soon. I'll talk to you on this, not via phone call, but I'll text you. I'm big on voice messages when I'm off stream here. Kings, good morning, Nico. What's your best explanation of adapting a probability mindset over a predictive mindset when it comes to analyzing the market? I think eventually you just get so fucking sick of losing that it's like, this is the answer. There's no secret. There's no like, hey, spin around 6 times in the morning and tell yourself you're worth 18 million. And like, it's like, just get to work, analyze your data, and eventually you'll come to the conclusion that it's like, hey, when I talk shit and say I'm definitely right, clearly that's not the case. Because if you were definitely right and you're sitting short, the market would poof, cease to exist, because it needs both sides to function at all times. Which is why probability most of the time is between 60 and 40%, 40 and 60%, and on rare occasions goes out to between 30 and 70% probability, right, of a trade working out, assuming you have a 1-to-1 reward to risk, just to make the numbers easy. Obviously, that shifts depending on reward to risk, but the edge is always kind of the same. That's it. I mean, are you sick enough of losing to adopt that mindset or not? All right, Jackson, I got you in here. We'll talk in a little bit, okay? But reply to that text. All right, well, we've got about a minute, 10 seconds left on both of these bars, the 5-minute top left and the 2-minute top right. It's tough because I know that we're probably in a sideways range, at least for a little while here. I try to avoid like the middle third-ish of these little ranges. So we're kind of just barely still in the lower third. If you include that big wick, which I do. Ah, shit, we're pushing to the middle of the range. I'm not big on middle of the range. Middles of the range is because a lot of times what you get is, let me here, look at the 2-minute chart. A lot of times you end up getting something kind of like this, where the bears end up seeing that. And if you get long in the middle of the range, you're kind of assuming it's going to be a sideways trading range, which is not always the case. And in my experience, that's just not a great trade. It doesn't pay all that well over time, like getting long right here in the middle of the range. So, hold off. The answer is screen time, and if you can pick someone's brain who's had a lot more screen time than you, that obviously speeds things up tremendously and saves you a lot of time. But at the end of the day, screen time is going to be your best friend. Because all these little things that you guys see me talk about, it's not like it's some magic. It's just I've seen this enough times where I know that, you know, hey, when I take that trade, it's not worth the work that goes into the trade. Maybe probability is closer to 50-50 than I used to think. So I kind of stopped taking that trade. This is one of them. You know, getting long in the face of a potential descending resistance. Can't do it. But we'll give it another bar and see if we can do something here. Well, coming into the 2-minute rollover here, pulling on back. I mean, you can see the bears are looking at exactly what we just talked about, that little descending resistance. It's just... There's a few things that if you're like, hey, in 20 seconds, give me the best... Maybe I shouldn't be dropping this all this sauce for free, but who gives a shit? In 20 seconds, give me the best things that I can do right now to improve my trading. I'd say, okay, screen time, remove the indicators, just look at price action, start hunting stops in addition to your existing setups, obviously track your data, that's a given, and avoid the middle of ranges, okay? And 6 or 7 or whatever the hell number we're on, you need to understand the daily context. Range or trend? Biggest tip in the world. You can't be taking range setups in a trend market. You can't be taking trend breakout setups in a range market, at least not the outskirts of it. Yeah, it's middle of the range here right now. Eric, point 10, train legs. Point 11, point 10 is optional. Yeah, man, we got leg day. We can do about 6 sets of bicep curls, followed with some tricep pushdowns. Call it a leg day. There you go, John. I just saved you about 3 or 4 years. And I know, I get it. We're all kind of the same. A lot of us think similarly. You're probably not going to listen. You're going to have to figure it out on yourself. You're going to have to make all the mistakes. I get it. I was the exact same way. I get it. But if you want to save yourself some time, maybe listen to what I'm saying. At least a little bit. All right, this is one of those interesting scenarios. We're holding the EMAs. I mean, on the 2-minute too. The problem is this. We've seen this so many times. You get these lower highs lately, and then you start to press those EMAs harder and harder and harder, and a lot of times you break, but not before you finish up this sideways range. Patterns, man. We've been seeing the same thing for, seems like 3-4 times a week for a couple of weeks. All right, Dennis, I got you, brother. Reply to that text. I'll hit you back when I'm off stream. Man, look at this. Look at the ATR on this 5-minute. We're at 22, but these ranges, man, the last 4 bars have been between 9 and the biggest by far 23. Really like 9 and 15. That happens in these sideways ranges. And then it breaks one way or the other, and then the ATR increases. It's been so common lately. Not Nemo, I show it all, man. I show it all, man. I'm not gonna sit here and put out a trade every 15 seconds. That's just being a clown for the internet, but I show it all every day. All right, just like we talked about, what was this, about 20 minutes ago, 25 minutes ago, and we've entered the sideways trading range. What did we talk about 20 minutes ago? So this kills volatility, happens just about this time, 3-4 days a week for the last couple of weeks, and then we see a break, and then volatility comes back. So let's see if we can get that break sooner rather than later, so we can hit this thing. Well, there we go. You see the attempted breakout of this little sideways range quickly wicked back. Very typical. All right, we got 60 seconds left on the 2-minute chart. A minute 55 now left on the 5-minute. For me to get long here, I would, but it would need to be a relatively substantial breakout, not this. This is weak. This is still inside of that little sideways range, I would say. These weak bulls are struggling to get out of the sideways channel, man. All right, 21 seconds left on this 5-minute bar. It's a reasonable close. It's all right, we have 50 seconds left on this 2-minute up top right of your screen. I want to see how this 2-minute bar closes. That 5-minute close was okay, but it wasn't nearly enough for me to slap it. I was ready to slap it, but I can't. I imagine we're probably going to see at least a bit of a pullback here, like we're getting. You know, I'm interested in getting long here. Kind of around the 70 region. Because I can make sense of that, because I can structure it very well. Range is low, by the way, on the market. Volatility is low right now, but if we look here, this trade wouldn't require me to wait for a close of any bar. But if I could get if I could get a close down here, maybe here around 70, I could structure a trade that makes sense for me, risk 15-ish points. Because to me, this channel is updating to look somewhat like this. With, you could almost argue, a little flat top here. Which you guys know how I feel about wedges with flats. So, see if we can get a 10, 15 point pullback. Taz, man, you're gonna have to sacrifice because I gotta get an entry, dude. I'd love to see a rocket for you. We're pulling back, man. I'm sorry I didn't get in. Just to 570 and we're good. By the way, Dennis, I got your text, man. I'll hit you back when I'm off stream. Young man, what would be the short argument here? The short argument here in my head is if we break this curl, we've also broken the 5-minute 20 EMA, and we're probably going to take out this curl and this curl. That's the short argument here. The bull argument is, hey, if it ain't broke, don't fix it, ascending channel. The bear argument is, yeah, but if it breaks, it might be kind of bloody. Look at the ranges on these bars, guys. Bottom of your screen there, ATR is at 20, and this is a 5-minute chart. That's really interesting. When we were trading off that first scalp we took on the 2-minute chart, the ATR on the 2-minute at that time was 18 or 19. Now we're at 20 on the 5-minute chart. So the range on these bars is kind of collapsing a little bit. But again, usually when you get a breakout of these sideways ranges, it starts to pick up. These last 7 bars have been brutally low volatility. Oh, bulls. Bulls, give me an entry, man. Yeah, Joe's looking at the 2-minute signal bar. Top right of your screen. Yeah, that's fine, but it's in a tight range. It's near the top end of a tight range. When you're in a very clear trading range and it's not a trend, now you could zoom out and say, hey, this is a trend. It's definitely a trend. Okay, yeah, but there's a lot of bear bars mixed in. It's really wicky. It's not a strong trend by any means. It's not a buy to close kind of trend. It's a buy low, sell high kind of trend. So for me right now, all I want to do really is get long. I just need a way to do it. And a way to do it for me right now is an okay pullback. Not some massive pullback. I'm not going to be too picky, but a pullback. Here we go. Bulls coming in for a test of that current intraday high, right ahead of 22.6. Right, we've got the shrinking bull body. If I do get long here, I have to be willing to take on at least, I'd say, about this much heat. So you have a couple options here on how to manage risk. Again, shrinking bull bodies, big wick up here. You gotta be ready in case you end up seeing this pullback here. And I could manage risk right on this curl. Because if that breaks, then my idea is out the window regardless. Just need a way to get long here. And looking at these stops up top. Please don't take those out before I can get long. By the way, I don't need 570 anymore as we grind higher. That minimum level I'm willing to take creeps up as we go higher. Son of a bitch. They took out my stops. Not my stops, but the stops that I wanted to use for liquidity on that long, man. See how that works? See how stop hunting is such an effective method? Instantly. That's a free 7 points, nearly. Jabel, does Apex ever make offers on activation fees or only on combine fees, like eval fees? Yeah, they're running one right now. Right now with code BIG, it's 140 bucks across the board for all of the accounts for the activation fee. And 80% off the evals. All right, we got a minute 44 left on this 5-minute bar. Let's see how this closes. Let's see how it closes. You know the bears are looking at an ascending resistance point. Gotta be careful on these outskirts. I mean, there's room, but you know the bears are looking at that. All right, 10 seconds. Come Come on, bulls. Give us a nice clean-ish close. Yeah, it's all right. Not bad. Give it 15 here. Limit order out. See if I can get a fill. There we go. We're in. And I'm going to risk this pearl. There. I like how that's structured. Now let's see if we can get a nice push. Again, toward the higher end of this channel, but we're getting strength for an attempt at a breakout. Most of these breakouts are going to fail. It's just a matter of they're going to fail eventually most of the time in a market like this. So that doesn't mean I can't grab a quick scalp, right? I'd want to pull this as we start heading into that, the bear argument right now, which is descending resistance. I'm sorry, ascending resistance. That is the bear argument right now. So I'd pull it as we kind of head into there, but... You know, 7 points. I mean, come on. Yeah, listen, Joe, everything that I do, Joe's asking about setups on different time frames. Everything that I do, it applies to any time frame. It doesn't matter. The patterns are the same. I mean, people like to think, oh, you know, the 1 minute acts differently than the 15 minute, than the daily. If you take a liquid enough security where the low time frames aren't obviously wicky, and you remove the price and you take off the time, it's damn near impossible to tell what time frame you're looking at. You could be looking at a daily or a 5 minute. It's really tough to tell. Use that to your advantage. Yeah, Jacob, I haven't used Top Step yet, so I can't really give you a real opinion on it. I've heard good things, I've heard, I guess, bad things, like any other firm. My bull's getting wicked back here. Come on, bulls, push us up through. Let's at least see it break a 620-ish. And then we start pushing the top end of that little ascending channel. Bulls, you sons of guns. We got bills to pay, baby. Let's go. 620, 630, 640. Yeah, you said shrinking bull body. You remember when I entered this trade, what I said, right? I'd have to be willing to take on a certain amount of heat if we decide to backtest the low end of this ascending channel. And then a stop out here would be okay, because that right there, essentially where my stop is where this idea goes out the window anyway. Because that channel has now broken at that point. Yeah, John, I'll cut it. I'll cut it early on a discretionary decision. I don't like to do it. I'm not rampant about it because that's when emotional decision making comes into play. But yeah, 100%. But typically, the reality is, the way that I structure the trade was it very intentionally done. So unless something really big switches, like taking on heat all the way to the bottom of the ascending channel was part of the plan before I was even in the trade. So making on the fly calls like that is kind of going against the original plan, right? But yes, to answer your question, there are certainly scenarios where it makes sense. There's a push out of the bears, huh? Okay, there's a test, I'd say, getting close to the bottom of that ascending channel here, and kind of the 20 EMA on the 5. See how the bulls react. Got 2 minutes left on this 5-minute bar. All right, minute 30 left here. Here's a hard test. I don't think we got news just now. Nothing that I'm seeing come through yet. Yeah, real hard test here. Yeah, we're gonna get stopped. All right, we'll stop ourselves there. I'm gonna get rid of this. Okay, that's a big old surprise bear bar. The 2-minute is actually looking kind of tempting. However, we haven't really, I'd say, completely snapped this look. 25 seconds left here on this 5-minute bar. Here, this is a better look. See this 2-minute expanding bear bars? It's really interesting, actually. You have this here. Yeah, time to play. It's just verbiage, brother. It's a bigger bar as far as volatility, right? Yeah, give this 20 seconds. Nothing there in the first 30. Probably have some stops, I'd say. Maybe a couple here. Most people would default to this. However, then we also have that 50% retracement to think about, probably around this, yeah, about this region here. A couple of things to think about here. Yeah, I saw the Tesla headline. I don't think that that's, I mean, maybe. I don't know if that's it. I really want to see these stops here get tested. I'm going to stab right there. Widen things up. I'm going to risk the high a day. And I want to see these stops here get tested. We'll widen things way out and see what we can do. We'll go ahead and bet against that little channel holding after that big surprise move. Retesting that 20 EMA on the 5. Typical. Okay, range on the day, by the way. Where are we sitting? 140. Yeah, I think about 140-ish. Okay, so that right there, that we talk about, that's about a 60, 65 point pullback. So we do have to talk about, as we come into these stops, that 50% retracement zone. We've now tested it, which I waited to get short. As we tested that, came back up. If we can get another retest and take out the rest of those orders that are sitting at 50% retracement and break this stop, then the idea is very in play. There'd be enough room. Strong close though out of the bulls right there. That's a very strong close out of the bulls. Yeah, see, Joe, that's the thing, man. You can be long, and someone else can be short, and it doesn't mean you're both... Well, it doesn't mean one of you is right and one of you is wrong, necessarily. It depends how you manage the trade. Could mean that, of course. Damn, these bulls are really buying this back up here. They take out the highs, it's like, okay, good game. Good game, because that'd be quite a hell of a move. All right, 2 minutes left on this 5-minute bar. Man, these bulls. Damn strong here out of that hole. Well, the strongest we've seen them all day. I'm into 22.6. And tier 3 level, not looking at that really on its own. There's my bearish, finally trying to step in, huh? Well, there's the rollover. Pretty strong sequence out of the bulls, to be honest. You gotta say, I'm pretty impressed out of them. Of course, they took their time when I needed them to be strong. Well, 2 minutes have passed on this 5-minute bar. Man, the bulls are trying. The bears so far have been able to hold them against 22.6. But again, that past sequence of those last 2 bars, very strong. But essentially what we're looking at here is a kind of a battle between, hey, ascending channel versus full day's range backfill. But if they take out these highs, man, I want to be out. Peter, would I ever add on here? Yeah, I'd be open to it, but I don't have a bear setup. I mean, for most people, managing adding to losers is not worth it. However, it can make mathematical sense in a lot of cases. This, as we speak right now, is not one of those cases. All right, 5-minute roll over there. Yeah, I mean, these bulls are trying, man. I say, I'm very impressed with the backfill here out of the bulls. We haven't been seeing this a lot, at least these, like... You know, this is even more impressive than earlier here this morning. These big surprise bear bars or bull bars. Surprise, I don't mean like, wow, it's so surprising that it went that direction. That's not what I mean. It's always 60-40-ish probability-wise. What I mean is volatility. I mean, look at the sides of all these bars, the ranges, and then boom. All of a sudden you get a big old range. To backfill that on a complete V shape is pretty damn impressive out of the bulls. I gotta give it to him. Pretty hard push here. I mean, you could almost draw it like this at this point. That's really interesting. And then you, of course, still have the bear case for the ascending resistance point. You know, again, this isn't all that common when you see a very clear level like this, and you see a hard single bar break closing at the low, and then a big hard reversal. It doesn't happen all that often. Eric, yeah, good question. Eric says true or false. Low volatility equals, I'd say, lower probabilities. Probabilities of a trade working, of course. I would tend to agree in the lower probability category. I wouldn't just say low in general, but like probability right now, I mean, believe it or not, the reality here is probability right now is in either direction is quite a bit lower than my probability when I hit short on the big outsized bear bar closing at the low, below previous wick lows, below the 20 EMA on the 5. Which again is like if you took a weighted coin flip, and this is kind of opinion based, but also not really. Well, I guess you would say it's opinion based because the market always has two sides. But at the low of this bear bar, if you took a weighted coin flip, I would say it was about 60, maybe 62, 40, or 38. But that doesn't mean that if it's weighted to the tail side, doesn't mean it can't land on heads, right? That's the game, in one sentence. That's the entire game of trading. Yeah, I mean, obviously chances are here that the bulls are probably going to see a break through the high. That'll probably be good for a free, I'd say 5, maybe 10 points for the bulls. So chances are here we're getting stopped, of course. See, look at that. Man, I got to flatten here. Okay, look. 7 points? See, if you're long, like for example here, if you got long on this bar, which would have been reasonable at the time, would have worked in hindsight. You know, that right there is a stop hunting mentality. Probably put a take profit, maybe 17, 18. Ask for 4 or 5 points out of the stops. And there you go. All right, let's move on. Let's see. Again, keep head down. Keep scalping. It seems like the bulls are not willing to give up on this little ascending channel. Now we just have to try to do our best to determine where does that ascending channel exist in most people's heads. I mean, we could clearly draw it. Yeah, hold on. We could clearly draw this, I'd say probably like about that. And then from there, I mean, you could take this low. And again, when I'm drawing these, it's not like just buy on the level. That's not what I'm talking about. But we just need to be aware of this. You could also draw like this. Okay, now this is, of course, in hindsight. This seems to be what the bulls are watching. The bears really hope is that this holds and or this breaks and turns into a test of this. There's always two sides to the story. Yeah, I mean, looking at that 2 minute, Huge V-shaped recovery, by the way. Honestly, quite the show out of the bulls. We've not seen a lot of this. We've seen this a couple of days in like the last couple months. These big recoveries. So, you know, bravo, bulls. But now we're back into a trading range, so we gotta, especially on the 2 minute top right, it's pretty clear. So for me, for now, I'm kind of back to buy low, sell high mentality. Took a stab on that break, didn't work. It's all right, back to buy low, sell high, though. I gotta see if it holds and kind of where. I mean, the 2 minute does show you it. If you take this wick out, this very well could turn into a flat. Flat tops, they tend to break, man. All right, back in 2 minutes. Don't go anywhere. All right, we're back. Clark says another big dump coming. Well, we'll see, my man. So after that recovery there, I'm mostly interested in longs, but not at the top of this range. I'm interested in longs on pullbacks, if we can get them. Look at the strength you're out of the bulls. It's quite the move, but, you know, we're heading into the bear argument right now. Bears are seeing that and they're getting, yeah. I don't know, man. Ascending resistance. So again, right now I'm really only interested in getting long unless something shifts. But I'd prefer to do so on a pullback. All right, guys, but I'll tell you what. Dennis, Jackson, I will be hitting you guys back in a little bit here to see if you are a fit for the program, see if I'll take you on. And for the rest of you guys, I will see you tomorrow morning. All right, I'm going to hit lunch. I'm going to come on back in the afternoon and just take good trade, and see where we end up. All right, guys. Hey, Apex right now is 80% off single day pass. They brought it back. Okay, use code BIG. Take Profit Trader, though, which is really good for keeping you afloat while you're scaling daily payouts, right? You have money coming in. Is 30% off, but no activation fee, which is a really big deal. Same code BIG. Best deal always at both of those firms. All right, guys, I will see you tomorrow morning. Market open. Have a good day. Wait for it to come to you, and when it does, hit it. Can't be scared. Can't be scared to execute the plan. All right, see you in the morning.